Welcome to Vision 2026. We give expertise a voice. A platform where bold ideas, lived expertise, and real experience shape how we grow, lead, and create impact in 2026 and beyond. Meet your host, David Bauer, bid architect and strategic thinker, who helps leaders turn complexity into clarity and gives business leaders a voice that wins in the real world. Marna Rowitz, seasoned strategist and business leader, helping people protect what they've built and grow with clarity, resilience, and foresight. Glenn Leese-Jones, Map 4 life coach with decades of experience guiding people and entrepreneurs to find purpose, set direction, and map their journey to meaningful success. Russell John Fagan, sales mastery trainer, who brings practical sales insight and transformational strategies that help individuals and businesses increase their influence and performance. Wilhelm Lombard, human systems and team performance coach focused on helping organizations strengthen team alignment, leadership energy, and human systems so people are ready for growth before growth exposes weaknesses. Together, we bring unique perspectives and deep expertise so you can think bigger, act bolder, and make 2026 your breakthrough year. Hit that subscribe button now and follow Vision 2026 for your weekly dose of expert insight, future-focused conversations, and real-world perspectives shaping South Africa. This is Vision 2026, giving expertise a voice.
Welcome to the show. Fantastic.
Yeah.
Thank you. Thanks, Michael. Great to have you here. Thanks, Peter. Great to have you here. Today we're going to be talking about something that's actually just amazing that's happened. You know, we've been in a scenario where the dollar many years ago was like at R1 for $1, even less. Michael and Peter were able to tell us that.
Yeah, the rand was stronger than the dollar, yes.
Yeah. And then it's all gone up to about a few months ago, it was 20 Rand to the dollar. And now suddenly it's down to below 16. And I think this morning it's 15 point something. So
Yeah, no, it's touched on 16 again now.
Sure. So, you know, something's happened in the industry. And today what we're going to be talking about is why it's happened. And we've got basically Peter and Michael from BeztForex, who are basically experts in their field with regard to currency, trading in the industry with regard to, accounts for getting dollars, euros, etc., etc. So I'm very pleased to have them here today. And also like to just welcome our experts and our co-hosts, Glenn Leese-Jones, Marna Rowitz, and Wilhelm Lombard. Russell John Fagan has given his apologies today. He's actually got a training session in Shoshmagovi. He's starting a session there. So forgive us for him not being here today. But let's start the question. And, what I'd like to really understand from both Peter and Michael, I've got some US dollars out there, and I was a little bit slow. I didn't actually take up the exchange rate when it was 20 Rand, and I always thought it would go back, but it hasn't. It's actually dipped. Yeah. And I'd like to understand, the Rand has moved basically from 20 Rand a dollar to below 16, or just on 16 as it is now. Why does this single move matter so much to South African businesses?
David, I'll quickly get in there. I think for businesses in today's atmosphere, I mean, if you look at our economy, 80% of all movement of our GDP has some inflow, outflow of foreign currency. So it's either importers or exporters, but 80% of our economy has some inflow. I think also we need to take this whole move with the Rand dollar in perspective. If you look at the pound and the euro, so the Rand to the pound, Rand to the euro, there hasn't been such a big move. So the question now is more on, in our total system, is it really Rand strength or is it dollar weakness? So I think that's where we need to start to look at it. And I mean, as you rightly said, we're not economists and we won't answer it, but the whole thing outside of this is geopolitics in South Africa, in the world, what's happening. I mean, we know about the Ukraine war, we know about Venezuela, all the things that's happening, all the tensions everywhere, and Trump that's pulling carpets under everybody. So all of those things got an effect. So at the end of the day, is it merely rand strength or dollar weakness? And plus, with all of this, then you've got the gold price as well, where gold skyrocketed with all the stuff that's going on, which faces back to geopolitics. Why does everybody go back to gold? Why do they want to be backed in gold? It's all geopolitics. So within this whole ecosystem, everything's got an effect on something. So yeah, that's my little thing on why it's happening, why we see these big movements. Michael, you want to add?
Yes, no. Basically, just to add to that, gold has always been seen as the safe haven. And so whenever there's turmoil anywhere in the world, it's the first thing that industry or financial houses buy up gold. And then on Monday, when the gold and silver sort of came crashing down, but is slowly recovering now, but it's still seen as the safe haven. There's always been talk about BRICS bringing out their own currency and this and that, which is, as far as I'm concerned, never going to really happen. The AU, the African Union, also wanted to bring out their own currency, like, the euro, when the Eurozone started. I mean, I was still, when was it? All the legacy currencies, Deutsche Mark, French franc, those types, and British pound, whatever. So all of that was still, in effect. But now the problem is our economy, the South African economy, is based on our raw commodity exports, coal, steel, manganese, all of that, that's not getting beneficiated in South Africa. So this is very bad news now with this very strong rand for the exporters, but it's very good news for the importers. Now, our imports are huge in terms of the GDP, as Peter discussed as well.
Yeah, and then I think on top of that as well, there is ways where you can mitigate this risk in a business. I mean, Michael is from a banking background, and I come from more a business background. And how do we actually go and mitigate that whole risk? I mean, at the end of the day, if you've got some exports, there's certain things you need to put in place. We can discuss it a little bit later, but things you need to put in place to make sure that you mitigate that risk, that if the rand falls or whatever, or it strengthens, whatever, how am I going to get enough rands to cover actual cost and not take a loss? And same with the importers. I mean, importers are smiling now because they can import plenty of stock at a lower rate that will push up more margins. But at the end of the day, how do you manage it? I mean, because nobody's got a glass ball that can, a crystal ball that can predict what's going to happen next. And especially where we are currently in a worldwide economy, what do you do? How do you best manage that risk at the end of the day for importers and exporters? And yes, if you're in that market, there's always going to be a risk. So, yeah.
Sorry, Peter. Sorry, Michael. Yeah, carry on.
No, I was going to say, so adding on to what Peter's just said there, we talk about sort of a hedging strategy or, risk strategy. Our clients, we sort of, you have clients that say, no, they just do everything at spot. They don't deal with forwards. They've had so many disasters with forwards and things like that. But if you manage and you stay on top of it and you take out forward cover, it works like a bomb. It really is, and this is an OTC, an over-the-counter product. It's a derivative. It's not a thumbsuck of where the dollar rand will be or whatever. It's based on interest rate differentials between the dollar, the rand, or whatever currency you're going to be covering forward. But then you at least, we can always say you can sleep at night knowing you've bought your dollars or you've sold your dollars, in the future at a given rate, and wherever the rand goes to after that is, you're happy, you've worked it out to how you want it to be, type of scenario. So either you're going to make a nice profit, or you could lose a bit, on the spot market. But you need to sort of peg your levels and where you want to be.
So Mike, if I can understand what you're saying, you can basically hedge your bets by taking forward cover on a certain rate that you wish to deal with. I mean, is this something that you guys deal with often with businesses? Peter, you said that some people like not to do that.
Yeah, it's on a daily basis. We actually do that. I mean, we not in what we normally do is with our clients. We actually tell them, listen, if you don't have a strategy of how you're going to hedge or whatever, because some guys say, listen, we hedge 100% of all our, say, import expenses. And it's not necessarily that good. I mean, you can go on a 50-50 where you hedge 50% and see what the rates does, and then you can do spot. So your risk is mitigated. It depends on what your strategy is. And within business, I mean, that strategy or policy, we can help you to build that policy at the background. And then at the end of the day, it's like, it's consistency. So you need to stick to your policy. And what we always tell our guys as well, because say, for instance, they book now forward cover, and all of a sudden the rand dollar is dropping like crazy, like this last few weeks, where it went from 16.80 now it's on 15.80, whatever. So it's quite a big move. But we always say, listen, you make a call on what you want to hedge when. And if you made that call, that was the best call for that at that stage, because you are looking at the rates, you are looking at the markets, what's happening. At the end of the day, if you go over a period of 5, 6 months, 12 months, you will see a saving, or you'll see that you could have been much worse off if you didn't do it in that manner. So rather stick to your strategy and how you want to do it, so that you can manage your business. I mean, it's easy to just fix rates for, say, exports at a certain level. You also need to make sure that your cost in and that your customer at the end of the day understand, we are going to hedge at this. Are you happy with that? And then you can hedge. I mean, there's different ways you can do it in contracts where you can say, listen, I'm going to hedge, but we hedge at, let's say, for instance, the product will take 3 months to get here via ship. So okay, we'll hedge for 3 months in advance at the rate of that. If there's a big movement and we're going to lose, whatever the case be, you'll be liable. So you can put that into your contracts and stuff, that the customer, your customer, and do you understand exactly where the price barriers are? Because currencies move, everything is it's a dynamic system at the end of the day.
Yeah, remember, it's 24 hours. So if you take, for example, we all woke up now this morning. The Far East market is still open. When they close again, the European market is going to open up now as well. And then late this afternoon, three, the US market opens. When they start closing, then the Asian market opens again. So that's why there's so much. But I mean, South Africa is really a drop in the ocean compared to the whole world's trade. I think, what was that presentation we were at last week?
They said that the movement of foreign currency in the world daily is 3 times South Africa's GDP. So the amount of currency going around on a daily basis is 3 times our GDP. So that's an immense amount of money. So you can just imagine where we sit. I mean, we're really a drop in the ocean.
No, absolutely. Now, from a business point of view, and I'm sure there are a lot of businesses and entrepreneurs who are actually on the show, or who will listen to the show. What's the benefit of dealing with, say, BeztForex, rather than actually going through, say, for example, Investec? Now, for example, I've recently seen on Investec, I can actually open a dollar account, I can open a euro account, quite a lot of options there. For a business, why would they actually go through an expert business like yourself rather than going just through the normal banking scenario?
Okay, I would bring it down to two things basically. First of all, our expertise. I mean, all the guys in our business is either ex-bankers. I mean, our CEO and founder is the ex-CEO of foreign exchange at FNB. So that's the first thing. So we've got a lot of banking knowledge, international banking specifically. Then as well, we have our own treasury or exchange control department. So that's another thing that's critical, because especially if you start to do third-party trades, or you need Reserve Bank approval, we've got a specific department with the only TOC, or the only third-party foreign exchange company in South Africa that actually has a skilled department. And thirdly as well is the way we do stuff. So with your bigger, let's call it your 4 traditional banks, the skill sets there is fading away, in the sense that if you call into a bank, you're going to call into a call center. That call center is going to give you an answer. They're going to say, listen, you need to send that. Then you take, say for instance, you do a Reserve Bank approval. Then you send the stuff that required. Then there's another person looking at it. He's going to come back, say, listen, now we need this. So the delay in the process is much longer. And also our beneficial rates on foreign exchange. I mean, I did an analysis a few weeks back where I actually compared all the big commercial banks and their charges and their fees and everything. And I compared it to what we would charge based on our banking partner and their fees and what we can offer a client. And on margins, they were between 2.5–3% margin. So if your exchange rate is, to make it easy, 20 Rand to the dollar, so they will ask you between 20.40 to 20.60, where we will charge you nothing more than 20 Rand 20. So our margin is 1%, where is that? And then also the other fees. With us, you don't have any fees on bank accounts. You don't have any fees with SWIFT information and stuff. Our fees at most would be 1,000 Rand, depends on how you pay. And with the other commercial banks, it will go up to 1,200 Rand. So it's on fees plus on skills. So there's a lot of benefits. And the difference is as well, if I deal with a customer, the customer calls me and we resolve their issues. So there's one person you deal with, and we found it with one of our big clients as well. One of their actual transactional bankers on a day-to-day basis are begging them to bring their Forex to them, but they just said, no, listen, everything is working. I mean, if they need to do a Reserve Bank approval, we do everything for them. They make sure everything is right, sign it, and then we submit it and we get the approval. So there's a lot of benefit on that personal relationship with our customers to make it beneficial for them. Yes, you mentioned Investec. Investec's got very good products. There's products where importer can outsource from where the product is shipped. So all the transactional things that needs to happen through customs, they can do it. But there's also a risk at the end of the day for them, because now they can't just move out because they got the beneficial rates. They've got stuff on the water, and for some guys it works, and for some people it doesn't work. So it depends on the guys, but I think the benefit with us is our skill set and turnaround time. So we're obsessed with service to make sure things are happening. I mean, to give you an example, to make it easy, our record for opening a personal account for a guy that wanted to do investment cross-border, I think it was 3 hours. We opened an account. He wasn't, I mean, since we got the information till the account was opened was 3 hours. And we did it with the full FICA process. We did the FICA, the bank did the FICA, 3 hours. So that's the best case scenario. But I mean, that's the way we try to operate and service all our clients.
Sure. Yeah, thanks, Peter. Before I give over to Mana, I just want to just say that, obviously the disclaimer and limitation of liability here, we're here to do a talk show. And obviously each of the people listening need to actually do their own research and, before they make any decisions. We can't take any liability for what we propose or what we say. Mona, I'm going to hand over to you now. And you've got some insurance-related questions regarding the Forex and how that works, especially with making spot decisions with regard to the currency and so on. Mona, I'm going to hand over to you.
Yes, I think my question is going to be how do you manage expectations versus reality? Because we all know that one person can control the whole world's economy with what comes out of his mouth or her mouth. So I can just imagine Donald Trump having a discussion with his leaders in the morning and say, was that stupid enough? Did it bring the dollar down enough? Or shall I go a little bit down? Or shall I fix it a little bit? So I can just imagine what their talk is about, because sometimes I think, what comes out of that man's mouth? Where did he get it from? But my question would be, the expectation we have in our industry specifically, and how do we manage it? So how should an insurer plan for currency swings without relying on the rand strength is my first question.
That's a tough one to answer.
Sorry.
Yeah. So if you say insurance industry, is that for buyouts?
Short term.
Okay.
So let me give you the second question. Maybe it will bring it into perspective for you. So a client's expectation would be, for instance, okay, now the rand is looking better. So why am I still paying the premium that I'm paying? Surely that should come down, because logic would say, okay, now we're importing the product or the parts specifically for replacement or repair purposes. Why is my repair cost still the same? Why is there no change? So in order to answer that question, you need to understand that in perspective as well. So we need to manage the expectation of the broader public or our clients specifically.
Yeah, let's quickly make it practical. So for instance, you've got a, correct me if I'm wrong. So say for instance, you've got a person that was an accident, he needs to fix his car and the parts needs to come from either Europe or wherever, okay?
Yes.
So at the end of the day, the insurer would quote him on a certain amount at a price point at that stage. I mean, if the price point at that stage was we need to import these parts at 19 Rand to the dollar, that is going to stay the cost. I mean, obviously, labor and all those kind of things, that would stay separate. And that's what the customer needs to understand. I mean, that parts will take, if they fly it in, it's going to be more expensive. If they come via ship or whatever to Durban, that will take 3 months. So those parts were bought 3 months ago, not now. So that's the whole discussion. I mean, regardless of what the rand dollar is doing currently on spot, I mean, that's historic information. That's when the stuff has been done. That's what it was quoted on. And if you use a forward cover or they hedge that parts at a certain point, that is going to be the price. Because you can't all of a if the say for instance the panel beater needs now to pay that parts, they already put a FEC at, let's call it 1850. They got a good price, 1850. So the price is going to be 1850. They're not going to pay less because they need to honor that price still. And that was a decision made at that point. And that's the only way you can explain to the clients. The clients won't understand it because they think it works like take a lot or check a 60-60. Okay, I just ordered it, I need to have it now. Unfortunately, it doesn't. International markets doesn't move that quick.
I just want to add something there, Peter. Sorry, Marna, there is only one type of insurance for international banking for imports and or exports, and that's marine insurance. So whenever something is getting shipped out, sea freight, even air freight, road or rail, you name it, it's marine insurance. And so when you, for example, and most of the times, depending on the relationship between the buyer and the seller and things like that, if it's standing, if it's a brand new relationship, they'll ask for a letter of credit for the imports, and in there would also, make provision for marine insurance. It's normally 100% plus 10, so it's 110%, but some people even push it up to 120%,
That's right.
Then the other thing that is, I did a course many years ago through JCI on imports and that, and we had a marine insurance specialist. It was a 6-month course every Friday. And this is what people don't understand. The captain of that freight ship, if they run into bad weather or, really storms or whatever, to save the seamen's lives and that, they are allowed to dump the containers off to save lives. And that's why you'll see in the media a lot of times containers washing up on beaches and things like that, So, and that's where your marine insurance will also come into play, that you can claim, against it.
Yeah.
So,
but I think this is specifically to the consumer in South Africa. How do you explain that to the consumer that car needs to be fixed, or that's got solar panels that burned out or something?
Yeah, this actually boils down to your basic needs as well. If you think about food, and the expectation of the broader public, that would be, okay, the rand looks better. We import a lot of food. We import meat. We import, milk. We import so many things. Why do we still pay the same price? It's managing that expectation of the broader public out there. And how do you do that? And most of us, and I include myself, sometimes don't understand that. Why are we still battling this much? But we have to be very cautious in our decisions we make today, because it might change in a minute or two. I think that's what we need to, and it's education in the end. And I think this is what our role is to educate the public on how it actually works.
Yeah, specifically, if you take coffee, for instance.
I'm just going to bring that up.
So, coffee is based off of the coffee exchange in New York. Okay?
Yeah.
So we've got a coffee client. That's why I'm talking about it specifically. Yeah, so the coffee commodities. And the coffee price on the New York exchange doubled, literally, since last year, June, July. So if you take a Dow Egberts, I remember there was days when it was on special. You bought I think it's a 200 grams, whatever, for $89.
Yeah.
That same coffee is currently $189. Okay?
Yeah.
So there's two things. So it's the exchange rate plus it's the commodities price on that side. So they need to compensate for both. And then also coffee comes from all over the world. It's Brazil, it's up in Africa, it's everywhere. So that coffee also needs to be shipped. So they need to cover at least 3 to 6 months ahead. So if the commodity price last year, let's say in November, was double the price, and that coffee only lands now, they paid the coffee then. And the exchange rate was 80 whatever. So you're still going to pay now 190, 200 Rand for a 200 gram Dow Egberts coffee. So that's unfortunately the way it works. So I'm not talking about stuff like, let's call it perishables, chicken, and all those kind of things. There might be a shorter supply chain period for that, but still there's also a delay. You're not going to ship 2,000 pallets of oranges or whatever just overnight. There's going to be a time span, and they build that into the prices. So if the rand dollar strengthens today, it's not going to overnight give you relief, I think.
Okay, thank you.
Just on the commodity side, as Peter was saying, but there's also another thing we need to just, for interest sake, foot and mouth disease in the cattle industry is at the moment reaching epidemic levels now. So we're going to see a major increase in milk, eggs, and meat. It's absolutely great. Excuse me, crazy. It's very out of control, and government is not coming to the party to help the farmers.
Yeah, again, if they just know when to stay and when to not to say something, our world would be so much easier. But let's not go into politics today, because that's the big subject for me.
Let's stay to the point.
Yeah.
So, Matty, talking about that, next week we've actually got Dr. Volker who's going to be talking about the foot and mouth disease in South Africa. So it's going to be a really interesting discussion. Please join us. I'm now going to ask Wilhelm. Thanks, Mane. I'm going to ask Wilhelm Lombard to talk a little bit about, decision making regarding the currency and taking leadership with regard to, the change in the currencies when there's so much differentiation. Wilhelm, over to you.
Thank you, David. I hope you guys can hear me well. I find that my internet speed is fluctuating quite a bit this morning. I don't know why. But okay, my question is, what does the current rand strength actually signal, or what doesn't it signal?
Yeah. I'm going to answer this with a fairly quick one. The rand is not responding to economic fundamentals. It's sentiment, and it's your heart, your mind, and what's going on around the world. So the geopolitical situation with all Russia, Ukraine, Iran, Israel, the Gaza conflict, it's frightening. It actually, and that's where the dollar is taking a beating. Plus, as Marna said, Donald Trump opens his mouth. Okay, Peter's a big fan of Donald Trump, but I'm not. The tariffs that he's imposed as well, so from that point of view, the rand, there's been a paradigm shift. That's the best way to put it, because we've all grown up with this idea that the rand always loses strength and it never recovers. But I mean, we've seen now in this past year how volatile, I don't want to say it wasn't volatile, but there was a lot of knee-jerk reactions that created, sort of those big spikes. So when it's a knee-jerk reaction, it falls like hell, and then it takes quite a long while to sort of recover again. But there's always what we call resistance levels. It's got to break through a certain level to carry on, scenario. So it's a very difficult thing to say. So it's basically going back to what we said earlier on your risk strategy. What are you prepared to risk? Or if you don't have a risk strategy, sort of work out what you are happy with, on a 50-50 basis or 70-30 basis spot versus FEC and things like that. So it's kind of difficult.
Yeah.
So it's not...
sorry, Michael, to add to Michael as well, I mean, if you go and look at, we're specifically talking about rand strength against US dollar. If you go and look at the rand against the pound, I mentioned it earlier, rand against pound, rand against euro, there wasn't that big fluctuation. So the question is not, okay, is the rand strengthening or is the dollar weakening? So that's the question you need to ask. And as Michael said, geopolitics and everything happening in the world, I mean, yes, I'm not a fan of Trump, but he did some good things and he did some bad things. But at the end of the day, if he moves and the dollar moves, it's more a dollar weakness than a rand strength at this stage. And as I said as well, if you look at the gold pricing, as Michael earlier said as well, because we're big in commodities and stuff, that affects us quite big as well. So as soon as everybody climbs into gold, there is some strengthening of the rand, but this is mainly dollar weakness in my view as well.
I don't know if that answers your question, Willem.
Okay, yes, sorry for that. Yeah, thank you. Okay, just the short answer then. How should leaders make pricing and contracting decisions in volatile currency cycles? Short answer. How
Yeah,
should they do that?
I'm going to start with that one. Is make sure you've got a proper strategy, first of all. And secondly, manage it. So if you're an importer, make sure that you take advantage of a stronger rand. If you're an exporter, make sure that you see, as soon as you see the rand or the dollar, whatever currency you're in, as soon as you see there is going to be a dip, make the decision rapidly to make sure that you cover forward so that you can take, you don't lose too much.
yeah, so you
So make sure,
maximize your profits. Yeah.
maximize your profits. So it's all about strategy. I mean, to give you an example, in our business, I think David can also know that we send rates out 6 times a day, or we try to at least. We send rates out to our customers 6 times a day. And what that helps is it's always on top of their mind. Okay, listen, I know I import in dollars, so I need to make sure, okay, the rand is going down. Let's see another 2 movements or whatever, or we give it till tomorrow morning, they can move. Same with when you receive revenue and you need to convert your dollars. So it's all about strategy, I think.
Okay, thank you very much for that one. Then what mistakes do decision makers make when they assume the rand will stay strong?
I don't think I can give that, but I've got a saying: assumptions is the mother of all. But can use your own imagination. So never assume.
You're caught with your foot in your mouth, put it that way.
Yeah. No, so never assume.
Never assume. Never, assumptions are always. Yeah, makes, I'm saying this politely, sorry, Mana, an ass out of everyone. So, yeah. No, it goes back to what we said right in the beginning. What structures or strategies each company or client or, sort of adopts for themselves. And you've got to live with that strategy. That's the only way I can really answer that to the best, But a lot of people just say, no, that just spot, I'm not doing FECs. They got burnt on FECs. But that was way back when, shall we say, in the mid-90s, there was a hell of a lot of volatility. And then remember when COVID hit, I mean, the rand lost ground completely, and if you think of, if we come back now, post-COVID to where we are now, I mean, the rand, remember South Africa is also an emerging market. We're part of the emerging market, but we are one of the best regulated emerging markets going. And that's why the rand is traded so strongly, what we also call hot money. It's not illegal or anything. It's hedge fund managers that are sending money in, buying South African equities, stocks, short term, selling those stock and pulling out again. They really just, I don't want to use the word gambling, but their strategists and economists have worked out. Listen, South African stocks are still offering good value for money. Type of thing. So that's where
the long or the short is keep to a strategy. It's consistency. So you will know where you can buy or where you need to sell.
Okay, thank you very much. I think it's now Glenn's turn. I have another question, but let's give Glenn a chance.
Yeah, thanks for that, and thanks for those good questions there. Glenn talks about governance, ethics, and long-term sustainability. And Glenn, I believe you've got a few questions regarding that.
Absolutely. Thanks, David. Appreciate it. This has been a very interesting talk so far, I must admit. I'm learning a lot. So thanks, Peter and Michael. Scary stuff.
Yeah.
Interesting enough, you're talking about governance, ethics, and long-term sustainability. I know don't want to talk politics, but man alive, I think that's so required here in South Africa. In fact, across the world. Neither here nor there. My first question is really a pretty obvious question, but I think it's important that we do answer it. And that's simply this. Why do we need a South African Reserve Bank exchange control and then obviously financial surveillance? Yeah. I mean, why does it exist?
Okay, let me take this one, Peter. If you go back in history, it was after World War II when South Africa was still the Union of South Africa. I mean, I was born in 1961. My original birth certificate that I still have has got Union of South Africa on it. Yeah. So exchange control was brought in to stop outward flows or illegal outward flows and to balance things. So there's still quite a few countries that have got exchange control regulations in place. So from the SARB's point of view, every dollar, every euro, every pound or whatever is not yours, it's the Reserve Bank's. So, when we have clients say, yeah, it's my money, I can do with it what I want. There's what we call the exchange control regulations. It's virtually the Bible, of what you can and cannot do. And if you can't find a section within there, then you have to apply for Reserve Bank approval for something. Now, just give you a stupid example, a third-party payment where there's 3 parties involved. You need Reserve Bank approval for that. The other thing is that the financial surveillance. Now, Exchange Control Department changed their name a good couple of years ago from, I'm old school, I still call it ExCon or Exchange Control, but it's now called Financial Surveillance. If you go in on the Reserve Bank's website, Res Bank, R-E-S Bank, one word, it'll bring it up and you can go in and click on financial surveillance or exchange control and for authorized dealers, and you'll see, it's, if you had to print the whole thing out, it's like 6 inches. Look, in the early days before computers, you used to get a circular and you had to then make photocopies and put it and change, but now everything's electronic, thank goodness. So I'm telling you now, if it wasn't for the Reserve Bank, and we've got a very good, we've got or have had very good governors of the Reserve Bank that aren't kowtowing to Parliament or to government. And even within COVID times where they relaxed certain things and, sort of to make it easier, it helped. So from their point of view, they are looking after our balance of payments to make sure we stay in a surplus position as opposed to a deficit position. And they've done that admirably. I know a lot of people want interest rates to come down, but there's a reason why they're keeping interest rates where they are at the moment. Yeah. So
if I can add to, sorry, Michael, if I can add to that is if you go to a country like Mozambique or any of those countries, say for instance, you do business, you're a mining company, you do business in that country, you sell your product out to the world. Now, Mozambique receives their currency. Mozambique doesn't have a surplus of currency. So for a company in Mozambique operating with foreign exchange, they can't get their money out. So the Reserve Bank basically makes sure that we have enough foreign currency so that we can pay and deal with foreign currency for imports, exports, all those things. Remember we said the GDP is 80% of that GDP is has got some foreign currency flow. So it's highly important. Plus also Michael said about all the surveillance, making sure everything is above board. I mean, as you guys rightfully said, we've got big issues on corruption, all those kind of things. So it's money laundering, corruption, funding of terrorism, all those kind of things. That's why the rules are there. at the end of the day.
Yeah, and then there's also what we call politically exposed persons.
Yeah.
And, yeah,
Yeah.
And
So
then
we actually look at that as well.
Yeah, you've got to, so that's sort of even enhanced due diligence that you have to do on politically exposed. And then you've also got restricted entities. Now you have OFAC, Office for Foreign Asset Control, that's the Americans. And you've also got the Europeans, that add their own sanctions. So there's still a lot of, for example, Zimbabwe is still one of the restricted, it's got limited restrictions, but it's still on the listing, and there's certain names when it was Bin Laden, there was a lot of people's names with sort of similar, and all of a sudden they were on no-fly zones and you name it, and it took them a while to get it up. So, and I mean, if you take now the major countries that are still listed are, Cuba, Iran, Iraq, what's the other one? I've gone completely blank now. Sorry, it'll come to me about it, but yeah. So there's a lot of things that we have to take into account, from that. But I mean, you must always think of the Reserve Bank not as Big Brother looking over your shoulder, but as, the dad figure looking after the entire family. That is South Africa. Yeah, that's
yeah, absolutely. Okay, well, keeping with that, let's talk compliance quickly. Compliance is a major issue as well, and I want to really ask the question: when it comes to finance, what would you say are the most common compliance mistakes that businesses in South Africa actually make?
I think from a business perspective is they don't talk to their bankers, specifically now from FX or exchange control, whatever.
Correct, yes.
So yes, there's new rules coming in. We had it with clients where a new rule came in and we need to comply with it. But guys always think though they can go and read. I had it with an audit firm where they say, no, we're just going to read the manuals and then we'll make a decision. No, talk to your specialist in that field, because there's certain things for certain rules, and it doesn't necessarily correlate to accounting rules or IFRS or whatever. The Reserve Bank's rules are different, and it's there for a reason. So go and speak to a specialist in that field. I mean, with guys like me and Michael, we are specialists, but I mean, there's even certain things we don't get involved in. I mean, we've got regular meetings with our ex-con specialists where we say, listen, this is the situation. How can we do it? I mean, if you take it practically, yes, sometimes we do make mistakes. We say, okay, this was basically something that came in. We declared it as that. How do we fix this now? How do we regularize it with the Reserve Bank? And you can do it. It might be a process, but you can do it. You can correct with the Reserve Bank if you made a mistake. But at the end of the day, talk to somebody that knows. Don't just assume. I mean, we use the SWIFT system, which is used internationally, and you've got certain codes there, BOB codes, which they call balance of payment codes that you need to use. So it will either be for investments or for normal imports, whatever. And we find that the clients actually use the wrong codes. So make sure you talk to someone and say, listen, what code do I need to use? I mean, and sometimes the description is like a word different between the two descriptions. And you just use the wrong one, then the bank will decline your payment because you used the incorrect BOB code. So to avoid that, if you've got guys like us or your bank, whatever the case may be, talk to them. The difference is we will answer you actually. The bank doesn't necessarily answer you.
Absolutely.
So,
last question from my side, and again, this continues this line of thinking. When businesses make mistakes and they're doing the wrong things and not using a specialist like yourself, what happens when a business gets it wrong? I want you to give me some more examples. I mean, one example you gave me now is in terms of the code, the wrong code. I'd like to give you more examples. Practically, what goes wrong?
Okay, what we found is that remember your foreign exchange transaction is a two-legged transaction. So if you deal in US dollar, so say for instance you import from China, so you've got the Chinese bank where the dollars needs to go into. You've got the South African bank where you convert your rands into dollars and you pay over. But because it's US dollar, there's a corresponding bank in the US. And the transaction goes to the corresponding bank and then it goes to the Chinese bank. So what sometimes happen is you will pay over to the bank and there might be something wrong on the other side. So the corresponding bank will say, listen, I'm not going to pay these funds. We've got a sanction list or there's something wrong with that supply. So that needs to be correct. So that's practical stuff. So then they will keep the money. Everybody says to us, no, the Reserve Bank keeps our money. No, the Reserve Bank doesn't keep your money. The money will be blocked. So if they see there's something wrong, it will be blocked until such time that you can actually provide proof, the correct proof that it's fine. Because I mean, it doesn't. You need to actually have the correct information. So if the corresponding bank doesn't release those funds, I think, Michael, it's 30 days. They will send the money back to the original bank. So if I need to pay China now, so I only have cash flow for this specific payment. Now the corresponding bank is sending it back. After 5 days, I didn't know what's going on. We eventually got to the corresponding bank, we traced it, whatever. So now you're already 5 days in. Then after 30 days, that payment will go back. Okay? So then only you can do that payment. At the other end, you've got a supplier that won't release your goods. So it's a double whammy. You won't get your goods and you won't get your stuff until the payment has been resolved. Simple mistakes other that guys always do with foreign exchange, because you use the SWIFT system, you need to list the correct banking details. Everything should be word for word exactly the same. So if you pay a supplier, the name should be 100% correct. It can't be, for instance, ABC Trading 123, and now all of a sudden it's just ABC Trading. It should be ABC Trading 123. If it doesn't correspond, the bank's going to reject that payment and send the money back. It's all about money laundering and making sure that there's not illicit flows coming in.
That makes sense.
Yeah, and I mean, as well, if you look at individuals, people think they can just send a whole lot of money. So cross-border for investments, we're panicking what's happening in the country, we need to get our money out. You're limited there as well. I mean, you've got R1 million SDA allowance. Then after that, you need to get SARS approval up to 11 million. And after that, you need to get Reserve Bank approval. So you can't just send money out. Yes, it's your money, but no, you're going to report on all of that. And another thing I always get is, but this is my money. Why? Since when does the Reserve Bank tell me how I need to run my business? You need to get out of that mindset. It's not the Reserve Bank telling you. There's certain rules, and the rules are there for a certain thing. I mean, my wife is currently in Germany, and she says the people are, everything just happens. There's no people that's pushing in queues and stuff. We are, I think, in South Africa, reluctant to actually follow rules. We will cross the street, not over the zebra stripes, but in the middle of the street. So there's rules. We need to adhere to those rules for the Reserve Bank.
Absolutely. Absolutely. Makes sense. At the end of the day, it's about making sure that you're talking to specialists. That's really the bottom line.
And compliance,
Yeah.
The banks, now so when South Africa was put on the grey list, FATF, the Financial Action Task Force. Okay, fortunately we're off the grey list now. When was it? October, November last year. But they changed the definitions as well to what they call financial institutions. I mean, even a car dealership, estate agents, lawyers, you name it, are subject to as an accountable institution now. And this is where the big change has come in from a compliance point of view, which is a very good thing. Because, I mean, I'm sure you've seen it in the media and things like that, these, what we call them, tender entrepreneurs, and he goes and buys 10 luxury cars, and then shows it off on social media, big shot,
Yeah.
Now,
Exactly.
those car dealerships and things like that are subject to the same laws and that the banks are, in terms of financial compliance or financial surveillance.
Yeah.
And you
And
ask,
Glenn, sorry, Michael. With our banks, I mean, we've got one of the best banking systems in the world.
world,
I
yeah,
mean, I spoke to a branch manager of one of the traditional four banks a while back, and he said they went to a conference in the US where they actually, I mean, the way that the US did banking at that stage, I mean, I think this was 2 or 3 years back, but the way they did banking in the US was miles away from how we did in South Africa.
Okay. Yeah.
I mean, 5 years back, we removed checks from our system. I mean, the one day I was still at that stage at a normal business. I went in, I wanted to cash a check for, I can't remember for what, but anyway, got in there, said, no, sir, sorry, you need a card. It's like, but why? Because it's been phased out. Now, I'm talking under correction, but I think the US still uses checks. So, I mean, just that's a simple example. So, yeah, I mean, we've got a good banking system, but there's the underlying things like your car dealerships and things also that actually requires surveillance on credit and all those kind of things. They don't necessarily comply.
Yeah. No, sure. Absolutely.
yeah.
Fantastic.
Sorry,
Thanks very much.
back to that, the Reserve Bank can impose massive fines, really big fines. You'll see it in the media that this bank got charged for this, or or another entity who's sort of illegitimately trading, but is using a legit FSP number, financial services provider number, but it's somebody else, it's stolen, type of thing. Yeah.
Exactly.
So there are major fines. And also jail time. So yeah.
Great.
So we've got to be careful.
Yes, very careful. Yeah.
So guys, we've gone over our time, and we've got basically three minutes left. So first of all, I'd like to just thank Peter and Michael for being here today. It's been a very interesting discussion, and I've certainly learned a lot about how this whole Forex thing works and what's happening. So I'm hoping the listeners also have learned something from this and have a big takeaway. I'm just going to go around the room, just ask our co-hosts and then obviously Peter and Michael, what's your big takeaway from today's discussion? Mana?
Yes, I would say take advantage of the opportunities, but always keep your risk appetite in mind.
Thank you, Mana. Let's go to Wilhelm.
Yeah, thank you, David, and the rest of the team. That was quite interesting to me because I don't know much about these things. But yes, doing the right things right, that's important.
Thanks, Wilhelm. Glenn?
Thanks, David. Sorry, signal is really not too hot today. I don't know what it is. For me, if I had to put it as one word, it would be awareness. But there's a statement I'd like to make, and I think it was brought up earlier, and that Forex is a risk management ecosystem and not a currency purchase. I thought that was very good indeed. Excellent. Thanks very much.
I love that, Glenn. I love that, Glenn. All right, and from my side, don't make assumptions. I think that's the big thing that I'll take away from today. Let's go to Michael, and then we'll go to Peter just to end off. Michael?
Yeah, no, this was lovely having a chat like this. I must be honest. I'm not a natural speaker, put it that way. But but when I talk about the subject I love, and I mean, I've been in the international banking environment for many years. I'm a pensioner, but still keeping myself active in this. So yeah. But for me, it's lovely just to talk about it because I still learn something every day, to be quite honest. But thank you for the opportunity, David, and the rest of you guys. Thank you. Appreciate it.
Thank you. Thanks, Michael. Peter, I'm going to ask you to wrap up and to give your advice and
Yeah, I think. Thanks, David. Yeah, thanks for having us. I think the biggest thing for me is manage your risk. Talk to specialists. I mean, if you don't want to talk to us, talk to somebody that you trust, that actually is a specialist in the field, and manage it. I mean, business is all about processes. So if this becomes part of your process, I mean, luckily I'm comfortable in a business environment. So I mean, we can actually teach people how to go and look at these things and just make proper decisions. At the end of the day, some you win, some you lose. Sorry, but you will be able to mitigate that risk at the end of the day.
Fantastic. Thank you very much, Peter. Right. So thanks to the co-hosts and thanks to our guest speakers. Thank you very much for being here today. Thanks to our listeners who've listened in and stayed to the end. That's fantastic. And please share this on, share Vision 2026, follow it, and subscribe to our newsletter. There will be a newsletter on this, which will summarize what we've spoken about. So please follow that and subscribe to Future Forward. We will be talking next week about this epidemic out there, the foot and mouth disease. I think it's something very relevant. Please join us. We're going to be talking to an expert in the field about that, Dr. Thomas Volker, who's going to be talking about that subject. So thanks, guys. I'm just going to ask everyone to stay on, and we'll have an end discussion ourselves. And I bless you all and have a fantastic week. And go along and get in touch with an expert about your Forex requirements. Take care. Bye.
Thank you.
Good thing. Cheers. Bye-bye. Bye.
Welcome to Vision 2026. We give expertise a voice. A platform where bold ideas, lived expertise, and real experience shape how we grow, lead, and create impact in 2026 and beyond. Meet your host, David Bauer, bid architect and strategic thinker, who helps leaders turn complexity into clarity and gives business leaders a voice that wins in the real world. Marna Rowitz, seasoned strategist and business leader, helping people protect what they've built and grow with clarity, resilience, and foresight. Glenn Leese Jones, Map 4 life coach with decades of experience guiding people and entrepreneurs to find purpose, set direction, and map their journey to meaningful success. Russell John Fagan, sales mastery trainer, who brings practical sales insight and transformational strategies that help individuals and businesses increase their influence and performance. Wilhelm Lombard, human systems and team performance coach focused on helping organizations strengthen team alignment, leadership energy, and human systems, so people are ready for growth before growth exposes weaknesses. Together, we bring unique perspectives and deep expertise so you can think bigger, act bolder, and make 2026 your breakthrough year. Hit that subscribe button now and follow Vision 2026 for your weekly dose of expert insight, future-focused conversations, and real-world perspectives shaping South Africa. This is Vision 2026, giving expertise a voice.